Welcome everyone to the second last session of day one at the Modern Investor Summit. I'm Stéphane Renevier, Global Markets Analyst at Finimize, and we're wrapping up today's event with a very exciting discussion on AI's role in shaping the future of retail investing. So joining me today are two very special guests, George Kailas, CEO at Prospero.ai, and Andrew McCormick, Head of eToro US. So today we're diving into how AI-driven platforms are transforming decision-making for retail investors, creating personalized strategies, and navigating ethical and regulatory challenges in this rapidly evolving space. Andrew, George, how are you doing today?
Doing great. Happy to be here. Thanks for the time and opportunity.
Great. Yeah, great to be near you in London.
Awesome. Just a bit of housekeeping. First, a huge thank you to our session sponsor, Prospero.ai. They're developing incredible tools that leverage AI to empower individual investors, so be sure to check them out. And if you haven't already, just introduce yourself in the chat, with your name, say where you're tuning in from. And this session will be a little bit longer than the other ones. It will run for 45 minutes, including a 15 to 20 minutes Q&A at the end. So, don't forget to submit your questions in the Q&A box below. And let's just jump in. So, George, let's start with you. Is AI truly transforming investing, or, it's just another tool in the toolbox for investors?
Well, it's not just transforming investing; it's transforming everything. And if you're curious as to what might be out there, what funds or institutions might be using, I would Google the strawberry model, a decision-making model that's really cool. And there's amazing technology out there right now. Some of it being used by institutions, but some available to retail investors in ways that haven't been there before. And that trend's going to continue. And personally, I've been at this for 13 years in AI, building tools that could help retail investors. And we're really focused on transparency and showing retail investors, everyday people, how to use these tools in real time and follow what institutions are doing. And I think, we have a choice as the world is changing. And, we have Prospero on one side, and there's other great tools that are being used to help. And we're giving away free predictions that for the last 3 years, two of them, we beat the market by about 50%, and we're about 85% up on the market this year in our free newsletter picks. So we're really focused on transparency and equalizing. And one message I really want to give to people is, in building this unique world, we're rebuilding things with AI, and you have the power to create something better than what I think a lot of people are frustrated with. And one thing that I just want to call out are things like 24-hour markets or payment for order flow. And 24-hour markets favor institutions, favor robots that are managed by institutions, because those robots can stay up all night while you have to sleep. And in markets where options markets are closed, we're really focused on transparency by showing where institutions are making bets in the options markets in real time. But those analytics aren't even available overnight. And same with payment for order flow. You combine that with 24-hour markets, and all of a sudden institutions have huge advantages in price setting, huge advantages in price discovery. And that's the one message that I really want to give to people with this is, look for tools that get your dollars, that get your support and eyeballs, that are, equalizing things, leveling the playing field, as opposed to things like that are really just handing more power to systems that previously I know a lot of retail investors have been frustrated with.
The retail revolution is fully on. I like that, George. I like it a lot. Andrew, what demands do you see across the different generations and their interest in AI?
Yeah, so I echo some of George's comments. Like you see on social media commercials just saying life comes at you fast. And it's absolutely the case in technology, and especially with AI, and especially in the world of like finance and AI mixing together. And I love history, so I like to always think about like where we've been. And it's incredible to think just 5 years ago, we were living in a world where the typical retail investor would have to pay a $5 or $10 commission per trade. They'd have to buy a single stock of whatever company, whether it's Amazon, Tesla, Target. They have to pay like for Target, $125 5 years ago. You have to pay $125 plus a $5 commission. If you want to sell it, you have to pay $5. So thus, to be flat and be even, you have to make 10% return to even just the covered commissions. And that is only 5 years ago, but that now seems so historic, so ancient. And I think the same thing is going to happen with AI, right? Like, so George is way ahead of this many, many years, but the world started talking about it in big ways. It's just the past year or two now. And for most people, most investors, it feels fresh and new and interesting. And I think in 5 years, it's going to feel routine because it'll be so normal and it'll be so just something we'd use day to day. And it's interesting. Every quarter we do what's called an eToro, which is for background, it's a retail investing trading platform in over 75 different countries, offering stocks, ETFs, cryptos, options. Really passionate about education, innovation, and breaking down those barriers. And like George was saying, I think that's the huge value of AI, is breaking down those informational barriers between people who can study this stuff all day and have teams of analysts looking at investment research, as opposed to normal investors like us who have jobs and families and errands and to-do lists. But we've seen some of we do every quarter. It's called a retail investor beat, a survey of thousands of investors around the world, and just asking them, like, what are you caring about? What are you thinking about when it comes to your portfolio? And sometimes there might be a focus on tech, sometimes a focus on politics. And we found in a recent surveys that even today, with AI feeling so new and fresh, that already over 50% of retail investors are already letting, or in the future, they think they're going to let AI pick which stocks and investments they want to make. And what's interesting, when you look into numbers, the stereotypes should be true. We've seen Generation Z, that number is at 75% of people answering the survey, and Generation Z, who are our youngest investors, already cool with AI making investment decisions for them or going down that path. And then as people get older, like millennials, it's at 70%. And I'm proud to barely be in that millennial class, just one of these older millennials who remembers a world before the internet, before social media. But even in my group, we're at 70% of people being comfortable with letting AI pick their stocks, all the way up to the baby boomers, right? In the recent survey, 27% of baby boomers said they're cool with AI making investment decisions on their behalf. And if you stop and think about that, that's people in their 60s and 70s who lived for decades before using the internet and having home computers. They're already comfortable with AI, making critical investment decisions for them. And it's pretty incredible to see that kind of growth in a pretty short period of time. And it's amazing to think of that next wave, these future investors, the kids of today. I think that number is going to be like 100%. I see my own kids using AI tools all the time at school. I remember as a kid, like opening up Microsoft Paint and using like the clunky like airbrush and paint feature and highlighters to make little art. And now my kids make cool AI art for class in like 10 seconds. And I think when they eventually grow up and become investors and working, like AI is just going to be a seamless part of their entire life, and whether that's at work, family, investing. And I think that's really exciting. And to George's point, the fact that this can break down barriers, create ideas, takes a lot of emotion out of investing is super powerful. And it's cool to see already today more than half of investors are already like on this path, and especially the younger folks are absolutely leading the way.
It is very exciting. I think it's also a bit worrying, for us analysts, but also exciting.
Yeah, well, if it helps on that, I recently did like my own little case study of having a few folks make investments and ask ChatGPT to make their own investments. And the humans won, but just by a little bit. So the analysts aren't out of jobs yet, but it's certainly a tool that could help us all.
So I can breathe a little bit.
Yes.
George, let's get practical. How can retail investors use AI today to improve the strategies? And where does it outperform, and when does it fall short versus more traditional methods?
Well, I think the big thing whenever you think about this is it's so important to have a diverse array of sources. One of the things that has happened in creating Prospero.ai is that a lot of these problems and things that we're searching for were holes that I saw in the market, even, when I started back as an equity analyst. And, even then I'll always check a forward PE when I'm looking at a company. I will always check a 10K and read the management discussion and analysis to understand what a company does strategically and if I understand what they're doing. So you need your points of confluence, and whether that's tools like we make where you look at that and some other sources or under anything, that is one of the keys to investing. But the other part of the points of confluence is how you validate. And one thing that I can tell everybody is that you have a head on your shoulders and you can use it to validate. And where I see people go wrong most is just not thinking through things logically, in a sense. And one of the big things that comes to mind is you think of like a lot of these upstart AI companies that are claiming they could beat, say, Bridgewater or Renaissance Technologies in a head-to-head race. And what I always say there is like a lot of these companies haven't even raised $100 million. How could you think that they could honestly compete head-to-head in the markets with a Bridgewater, with a Renaissance that could lose that in a day and not even bat an eye? So, a lot of things that you have to do, and, one of the things that we try to really help through people with is like, look, we take stocks, we have various metrics where we're actually trying to show you the flow of institutions, where they're betting, looking at from different angles with different signals, guiding you in the education process there so you can be armed with better information and use your human computer, which is the best if you train it right. Because right now, the pure AIs are not ready to win yet. The best thing that you can do, especially because a lot of those best AIs that I named, you don't have access to, is train yourself on a lot of these tools and make sure that they pass, the sniff test, and make sure that there's story. Like, you have no idea how many managers I've seen with 2 years, 5 years, et cetera, that have good performance. They'll fall apart in a bear market. They'll fall apart for X, Y, Z reasons. A lot of these things look good when you first look at them, but they don't pass a common sense test. And what that common sense test always is this platform, are they saying they're the best in the world? Are they going to beat anyone? Or are they saying something more like we do, which is like, no, we can't compete on those levels. So we've spent a lot of time training algorithms to understand and visualize what's going on so you can make better decisions. It's little things like that you can walk yourself through, in addition to like a lot of the other research fundamentals, value investing fundamentals that I'm talking about. That's what's going to make you strong. Not anything where you go and say, oh, there's this one technology that's good, I'm going to throw this into ChatGPT and I'm going to make a bunch of money. It's never that easy. Use your common sense. That's the best thing that you can ever do in investing in anything.
Wise words. Thanks, George. Andrew, how has eToro adopted AI technologies internally?
Yeah, great question. First, I would fully endorse what George just said on the emotion piece. As a my own personal investing life, every single investment that I regret is usually because I made it out of emotion. I remember at one time actually in the line at Chipotle, panic selling Bitcoin at $2,500. And I really wish I hadn't panicked then, because I was a believer, but I got scared, wanted to get my money out, and now as Bitcoin's around $100,000, it sure would be nice to have that $97,000 plus dollars. So the value of AI is taking that emotion out of investing and panic and fear, and I think that's really, really powerful. So definitely echo what George said. In terms of eToro, we were very passionate about innovation in general. We've been in the mobile retail investing trading space for coming on about 17 years, right? So we're very early on crypto, on fractional shares, and just breaking down those barriers of investing. So innovation is a passion. It's part of our heartbeat, and not just what faces investors. We're taking a very bottom-up approach to AI. So even one example, earlier this year, we asked all employees, whether you're the CEO or you're a brand new analyst or something in between, we asked all employees for their ideas, how they're using AI in their own personal lives, but also here at work. And just for participating in that survey, you got free $250 of Bitcoin or some type of investment, how you want to invest it. And so when we have a staff of over 1,000 people, that's a big survey rewards are given out to people, but we really want anyone to raise their hand with ideas and find something they're passionate about. And what we're doing actually this week with our product and tech and engineering experts all around the world, we're having a hackathon of just people locked in rooms with a lot of cool snacks and just coming up with cool ideas that could help transform eToro as how we operate as a business and as a staff and employees, but also how we can better serve our customers. And in our day-to-day life, employees were encouraged to use AI and ChatGPT, whether it's doing contracts, research, getting summaries of long meetings, or looking at disclosure documents. It's something not just from a product perspective, but we're just encouraging all of us to use, whether it's surveys, hackathons, or day-to-day using ChatGPT, just all the time thinking about this, because it's certainly the future. It's efficient, it's helpful, and it can be like fun and engaging as well. And we think about how we're using AI from the customer facing perspective. There's a few ideas. We have what's called smart portfolios, where eToro is coming up with baskets of investments, whether it's stocks or cryptos. And we have a few smart portfolios where we're letting AI pick the stocks and the cryptocurrencies, and the customers out there know and understand, hey, there's AI involved in the decision-making process, and people are excited about it. And we have also, in addition, there's smart portfolios are not being driven and picked by AI, but they're AI-focused investments within the portfolios, like investing in companies that are making heavy investments in the AI space. Something we're also doing is just the natural language search. Most financial platforms, if you go into the search bar, it's a really clunky, awkward experience. We're trying to just have that be better for our customers, where you put in, you want to learn about a specific investment. It's not just ending in a dead end or going to a blank page, or a page with too much information, but trying to get information to the customers that they're looking for in easy and seamless ways. And also the customer support. We've really focusing on using AI tools to address customer questions and requests and inquiries in as quick as way as possible. And so far, we're around 80% of our customer inquiries can be addressed by AI tools in a very quick and timely way. And so that helps those customers, but also the customers who need more substantive help, where humans need to get involved. And then probably the last way that it's most fun and it's a bit atypical is we're really leaning into AI in our use of marketing. So this summer with the Olympics in France, eToro has a very big presence in Europe. And so we had a very prominent commercial over there that was driven and created largely through AI. And it was super cool and fun and trendy and received really well. And then here in the US, we recently launched our broker's business in New York, and we had an AI generated video of a very festive breakdancing battle between a bear and a bull in Times Square that also was AI generated. And so it's fun to it's not a typical, let's think of doing a commercial with AI, but it's something we're leaning into in all different directions. And it's cool to be able to use these tools. It's efficient, and also it can be fun as well.
George, I think you've touched on that a little bit in your previous answers, but how does AI impact human judgment in investing, and will it help democratize investing or widen the gap between retail and institutional investors? I think you've already partly answered that, but maybe you can expand a bit.
No, I got more for you, Stefan. But I also want to say that it sounds really like a lot of interesting things what eToro is doing. That Andrew mentioned with retail investors and reaching out and bridging the gap. I think that's so cool, especially when larger companies like that do that. We're very passionate about that at Prospero too. Reach out through the newsletter. A lot of people email me directly, George@Prospero.ai, and are surprised that I will actually train them on how to use our signals. And in investing, it's a real passion of mine. And actually, a lot of Prospero's best signals started in these conversations with retail investors. So I get a lot out of that too. But in terms of the question and how it impacts judgment, I think the most important thing is what you do on top of the tools, right? I think back, I worked at my first value hedge fund. I taught myself accounting to get that job when I was 17. And back then, one of the things that my mentor really stressed to me was, what is your edge? Right? You're smart, George. There's a lot of smart people. There's a lot of people doing this kind of research with much more experience. What is your edge? What are you doing? What are you doing to enforce that? And that's the best advice I can give any retail investor is look, there's a lot of these tools, but who else has access to them? A lot of people. Can you find how to use them to combine them, create points of confluence? Can you combine them with your expertise? Are you a car salesman and understand maybe how, Carvana is going to do some insight in that stock price? Are you a doctor and have some insight into, whether certain biotech stocks are going to do well, which is one of the things that to this day confounds me. by the way. So if you could do that, go for it. But it's about combining the tools with what you have in your playbook. And I named some different kind of careers. There's tons of them that you can relate to stocks that you can find some kind of edge in. Good, lean into that. One of the things that I always say, when people ask me to study the sectors, they're just like, there's a lot of sectors that I never really studied that closely. I really studied tech, and that served me really well. That's not the roadmap for anyone, but focus and understanding where you can find your edge is just so important. And sometimes having an honest conversation with yourself and learning lessons. One of the things that, I think even Andrew mentioned a few times is like one of the great things about AI is the objectivity. But I have to learn the same answer as it sounds like he did too. A lot of the times we're like, I'll make mistakes. I made a mistake in my newsletter this year where I literally had a typo on a ticker, and the ticker that I was supposed to get went up 30%. And I just, shook it off and said, I'm going to get back to my process. And that's the important part. As you're going through this, are you forming a process? Are you learning from your mistakes and writing them down? I can never learn these lessons enough. There's a stock called AppLovin that we ended up having like 100% gain on, close to that. But honestly, the first time I saw it, I said to myself, that's a stupid name for a company, and I didn't take it seriously at all. I've learned that lesson so many times. When I finally dug on it and when we finally did start investing in it, which by the way is often my process because I'm focused on the stocks I really like, and for something to break into my world, I do have to see it a couple times in our newsletters or anything like that. And that's just me being realistic about what my process looks like, and also understanding when I fold things in to my process. And everybody should have their own. We teach ours, and I think that helps a lot of people to just see, like, the newsletters, as I mentioned, we're very open about when we make mistakes, when we do things right, when we do things wrong. And I think that's super important. But, there's one thing that I'm going to close this with that I think is maybe the best thing that I can learn over time. It works well in life. It works well with investing. It's a Bob Dylan quote from the song My Back Pages. And it's, I was so much older then, I'm younger than that now. And that's a really powerful thing that I think a lot of people miss in investing, maybe even more than life, which is like the biggest thing you can do is think you know more than you know. And you probably know a lot less than you think. If you want a framework for that, one of the books I always recommend is Fooled by Randomness. It's a great Nicholas Nassim Taleb book. But I think most retail investors, when I see them go wrong, it's this way. It's them getting overconfident. They have those big wins. They're following some singular strategy that does well. They bet more and more, and then it ends up catching up to them. If you're focused on building a process around these AI tools and figuring out, like, what can make me unique? What is a way that I can work on my execution and my scientific process around these tools? That'll give you an edge over most retail investors.
I love that. Super, super valuable advice, George. Thanks a lot for that. Andrew, one last question before we go. We move to the Q&A session. What do you imagine is the biggest roadblock when it comes to AI adoption? Oh, Andrew, can you hear me? Okay, we can go back to you. Maybe let's start with
I think we maybe lost Stefan possibly, but George, I'll at least echo one of your comments, but I'll cite Taylor Swift instead, who said, "Shake it off." Right? When you make those mistakes, you learn from them and you move on to the next one. So different generational music, but something that works for everybody for sure.
Thanks. Okay, so let's move on to the questions now. So let's start with you, George. How do you address biases in AI algorithms that might impact investment strategies? Very important question.
Well, I think AI strategies are pretty inherently biased, and that's why Prospero has the approach that we do. Right? When we teach, we say we have these signals, and one of the things that we always say is the difference between, say, our newsletter and our app is that if you go in our app and you look at the top stocks, a lot of the times they're going to be the ones that people and institutions get the most excited about because they have the biggest growth potential. Consumer cyclical stocks, tech stocks, healthcare stocks. But if you have a portfolio of just that, it's not going to work out very well. So that's why we started writing our newsletter, where we say, how do we take these signals and form them into a good risk-adjusted portfolio? And I think, you understand bias by making sure you continue to inject a human decision-making process into any algorithms, any signals that you use. And that's why George Kailas still makes the picks for Prospero, not our best Prospero algorithm, because I know how to look at that. I know how to weigh all that, and algorithms aren't there yet.
Andrew, will AI widen the gap between established financial institutions and new fintech startups? Oh, can you hear me?
He's turned into a face.
Can you hear me now?
He's gone.
Oh, okay.
Can you hear me?
Yes. Okay. So what role does AI play? Yeah, George. So what role does AI play in identifying market trends and patterns that human analysts might miss? So I think, here maybe you can share a few practical examples of how you actually use AI.
Yeah, I actually think it's very bad at identifying like patterns. I think, one of the examples that I always use about a continuation of what I'm saying, of why I still pick stocks and recommend people pick stocks even on top of the signals, right, is I understand the news, right? I understand, I can weigh what's going on with the Middle East and the election and all that stuff and figure out how to form a strategy around that. Algorithms can't really do that. So actually, if you look at that sector-based stuff, it's really challenged. Where I actually really appreciate its comparative value. That's why we scale 2,000 stocks against each other. I gave you the AppLovin example. There was another stock, VST, that I wasn't aware of even recently that's been a big gainer. But like classically, I think the perfect example of where actually it showed me my human bias is one of the best case studies with Prospero is Meta. And Prospero liked it from when it was trading at 170 in February 2023. And it actually took me of it being at the top of a few of our important signals until it was at like 220 a month or two later, where I was like, oh, I better do this. And actually, it was exposing my own bias because I thought I was like, oh, Mark Zuckerberg doesn't know what he's doing. The algorithms don't know that. But it was actually the algorithms that were right. And it was telling me what institutions were doing, which was not caring about that and seeing that Meta was going to become like a profitability juggernaut again. So yeah, I would actually advise against looking for algorithms to give you market trends or things like that, or AIs. Like I would look for areas like where you're comparing stocks, looking for removing your own human bias and how you think about, I'd say, more narrow decision processes, not large ones where I wouldn't really trust algorithms for yet.
No, a great question. Are there any markets that AI models struggle to analyze or predict?
Should I do that one, or is Andrew?
Yeah, I think you can go for that one, and then
actually healthcare. It's really like one of the things where AI models find things very difficult are these like what are called binary events, right? And something like say a clinical trial or something like that. Like, one of the ways that we look at that, and one of the ways our strategy underlines it, is we're basically relying on institutions telling us in the options markets where they're betting heavily about these things. But the thing about like something like a clinical trial, institutions don't necessarily have a super high hit rate on that versus some of these other events that are more in like their wheelhouse and more like an understanding of a business versus understanding of an institution or a process that can even have faults in it. So yeah, I would say the more you're dependent on, I would say, something like a clinical trial that's hard to predict, or something that is controlled by an outside force. Energy is always difficult for an AI model because you have OPEC, and no matter how well it can predict, how well institutions can predict, where energy's going, the flow, supply, demand, things like that. You have OPEC that could basically decide to change the major variables. And yeah, they could be good at that, but they're not going to be as good at that as, say, institutions in that country who have a much better, in those countries, who have a much better inside track at predicting that. So I would say, like, our AI models struggle with those two things: harder binary events to predict, and then situations where there are external forces that can exert a lot of control or change quickly.
Andrew, are you back? Yes. Awesome.
I'm back. Yeah. Sorry for missing part of the discussion, but
Nope.
I'm here. Sure.
Awesome. So you've mentioned that you've seen a lot of different people internally using AI in lots of different ways. In what ways are people using AI wrong in their investing, in your opinion?
Yeah, it's hard to say, anything is wrong. I think anytime someone is using a new tool, right, that's a good thing. They will certainly make mistakes, right, and maybe you'll take a loss in the short term, but long term, I think that is a good development. Even if you take some losses here and there, I think probably similar, like George is saying. I think blindly putting everything into an AI tool and not doing any kind of like second guessing or using some common sense would not be probably an ideal scenario. But using AI as that informational shortcut, right, is so powerful. Right now, major financial firms, Wall Street banks, major investors have hundreds of analysts digging through research reports, quarterly statements, pharmaceutical results, and all these kind of details that none of us have the time or ability or expertise to pour through. And the fact that AI can like shorten that informational asymmetry and that gap is so powerful. So I hope everyone can start leaning into the space more. We'll all make mistakes, right? And whether it's AI or reading research reports, you're just making investments based on your favorite companies or where you spend your money, you're going to make mistakes all along the way, and you should never be all in on something. And whether that's just looking at research reports or talking to your friends or using AI, there's a lot of resources out there. Use the diversity of resources, including AI.
George, earlier you made two very strong points. I think one is that investors should find an edge and then develop a process. So we've got a question related to that. How much should they use AI in, I guess, that investing process and in finding their edge, especially as a novice investor?
So I think there's a great, like, I'm going to a different subject. There's a great book on startups called Lean Startup, and it's basically about how to innovate and ideate. And one of the things that I think startup culture has done well in that kind of concept is the idea of A/B testing. And I think that is the best recommendation in terms of a process and how much you integrate different kinds of tools. Do a lot of tests, become a scientist. Say, what happens if I just use these couple tools? What happens if I just use this one? What happens if I use just these kind of tools in the tech sector, but I use these other two tools in healthcare, right? Run these tests. And that's why, sometimes it's very hard in bull markets to determine if you found a real edge. But one way you can do is like look at the volatility of your own experiments, right? Do some experiments run up big and some down big? Do you have something where like, you have a stable experiment where it's like, hey, I make a good 2% every 3 months if I take this approach and use these tools and have these hold times. Like, that's the best thing I can recommend to everyone. Combine, these lean startup principles with your best, put on your best like scientist lab coat, start writing things down. That is like really the best thing that you can do. One of my favorite, teachers online for retail investors talks about keeping like a trade log, writing it down, also writing down the sources you used, your investment thesis. That is the best way to iterate and become better, and you'll find what the right tools for you are. And that's the most important thing. I could tell you what the right tools are for me, but you don't have 20 years of like trading and AI experience like me. So whatever advice I give to you is not going to be the best for you. You have to, do the digging and find out what's best for you.
Andrew, How do you balance stock picking with building a portfolio that includes other asset classes like bonds, ETFs, commodities, crypto, etc.? And I guess more importantly, what role does AI play or could play in all that?
Yeah, I love the question. And of course, my friends in compliance would say nothing I say is investment advice, of course. But in my own life, I like all those asset classes. I try to have like the biggest pot of money that's like in ETFs. I love ETFs in the sense that they're diversified. You can invest in specific sectors. I love the tech sector, love the semiconductor sector. So look for ETFs in that section, but also the typical like all stock market, the S&P 500. So in my head, I put a block of money there. And I kind of just like let it be, right? Some of those investments I've had for years and years. I sold some of it at some point to help buy an engagement ring. Some of those at some point to help buy a house. Probably in the future, I'll sell part of that to pay for a kid's wedding or things like that. But then I also have a much smaller percentage of that pot that's like the stocks, the ETF, the stocks and crypto specifically, the stuff that is more exciting, right? I love investing in companies I love, right? So I know George is like the technical expert, right? I'll probably invest too much from my heart and emotions, but it excites me if I, in line at Chipotle with my 4 kids, we go there all the time. I love the fact that I can tell my kids like, hey, we own part of this company, like a really, really tiny part of the company, but we own it. And I love a place at eToro, you can make investments for as little as $10. So if you're wherever you're at in your journey, I think you should try everything, right? Like if I just did ETFs, maybe you do better than if you're doing some stock picking. But for me, like I find it not just trying to make extra money and play for the future and invest in my life, my kids' lives, but also just trying to have some fun and learn new markets. I love like hearing about a new company and I start following them, start investing in them. And you learn just a lot along the way. So do it all, right? But have part, don't go, similar to what I just said in a prior question, like never suggest going all in on something. Like even if there's, like there's like Tesla, I love Tesla, I love the future, the robotics, the incredible change they can bring. I would never go all in. It's all about building a diversified, healthy portfolio, but I think there's definitely space in those companies that you love and that excites you and keep you wanting to learn more and invest more in those specific companies with individual stocks.
George, how could AI balance individual goals, market conditions, and risk tolerance to create personalized investment strategies?
So first off, I want to agree with Andrew. I'm not a heartless robot person. I promise. I think investing in companies that you love and believe in for the long term is great. I'm always just trying to balance. I think that's what feels natural to us. And if you're going to grow as an investor, you should push into your discomfort level. And that doesn't mean like gambling a lot, like the safe discomfort level where you're actually like making it a little less fun and more like schoolwork. Sorry, that's how you're actually going to improve. But there's nothing better than buying and holding a company that you really believe in, seeing it grow. Like, I completely agree with Andrew there. Then in terms of like what you're talking about in terms of like personalized portfolios, I don't really think that we're in a place where AI is there yet. I think at some point, one of the things that, Prospero, is on our roadmap in terms of being able to get even better returns for retail investors is combine in a data sharing environment where, we can ask questions of our users. Even something like, Apple's reporting tomorrow, what kind of phones have you bought recently, things like that, so we can make the predictions better for retail investors and perhaps even have advantages over institutions that way. But like one of the reasons I don't like that personalization is what I just talked to you is an explicit consent process, right? Where we ask something and you know what you're giving. Anything that exists today with that personalization, I don't like things that like read emails or do like that's how you get real personalization. I think there's a cost for that. And I think developing actual like relationships of trust in these, at the beginning I talked about like new institutions that do better, right? That's one of the things that I really, really want to see. And so, yeah, it's hard for me to advocate for that, because I don't really want you giving that kind of information to, Robinhood or, some other places that are, old institutions, not to just pick on Robinhood, say, Bank of America as well, where you're just like giving them more information that they're going to turn around and, use against you, use to bet against you, sell to other institutions, right? So I think like buying into that personalization in ways that, might continue to disadvantage you versus ways that I'm suggesting where Prospero can work with you. I don't think I don't think that we're there yet. And to be clear, like, I don't think anyone's earned enough trust to go down that personalization route. And until you trust an institution that they're actually going to do good with it, I don't think you should be giving that much personal information that would allow a place to do a good job with that. I certainly wouldn't want to.
Andrew, as we've seen and talked about extensively, AI can be great. It creates a lot of opportunities. What would you not like to see as AI develops in the investing world?
Yes, echoing maybe what someone George just said, is it becomes too powerful, right? I think AI is a critical tool, right? Like, but it should not be everything and controlling all of us. Of course, worst case scenarios, AI goes crazy and markets crash and things like that. And I think firms hopefully are being very smart in putting those kind of protections in place. But that's the like worst case scenario that beckons back to like Terminator-esque kind of movies. So I think it's hopefully we'll avoid all that and worse. But I think like I said before, use AI as a tool, right? But still use common sense. Don't turn over the keys directly. Use these great kind of tools that George's firm provides and other firms provides. I would suggest get started a little bit, right? If you're new to this space, you're not sure, like jump onto a platform, jump onto ChatGPT and just start asking some questions. I did this last week. Like, I'm a native Texan, so I'm very proud of like Texas, and I love technology, like I said. So I asked ChatGPT, like, hey, what should I invest in if I want to invest in Texas companies and tech companies? And it gives me like a list. Right. And so whether your amount is $50, $100, $500, $1,000, maybe just try with like, a small amount of money and just see how it goes and monitor it. Right. And just see how those picks go. But never like hand over the keys completely. But it's a powerful tool. It's going to break down so many barriers, make investing easier, take some of the like emotion and mistakes out of it. But humans will still always be in charge. So.
Thanks, Andrew. Okay, maybe the last question, or let's see if we have time for another one. For you, George, does AI-assisted investing pass along the reasoning for a particular stock pick and allow the investor to make the final decisions? Like, how does that work at Prospero, I guess?
So that's one thing that we think is so important, right? We have 10 signals, and I'll just like rattle them off really quickly. Upside, downside, profitability, growth, and market similarity on the long-term side, net option sentiment, net social sentiment, short pressure, dark pool, and institutional flow on the short side, right? And so we actually want to create a language like what you're talking about, where we could be like, no, we're adding this stock because it has high upside, high net option sentiment, and high social sentiment, and we'll drop it if it goes below these levels, right? Or those levels might stay high, and we might see the short pressure go up and the dark pool go up, and we say, hey, there's just too much risk in this now, even though those signals have gone up. So that's what I think is very important, exactly what you're talking about, and we've done that. So there can be a language around a logic, and there's AI helping to build those signals and process a lot of data and make them powerful. But at the end of the day, we can talk like humans about it.
Thanks, George. Okay, so maybe to finish, just Andrew and George, one final key takeaway, for everyone listening and watching today. Andrew, let's start with you, perhaps.
Sure. Yeah. Well, first, again, thanks for everyone for joining. Great opportunity. George, love your insights. Great discussion. Stefan, thanks for moderating and hosting. Look, AI is very new. In 5 years, it's not going to feel new anymore. It's going to be normal. So I suggest people just start, right? Take those baby steps. Whether you're a brand new investor, you're investing 20 years, start just asking AI, ChatGPT, whatever the tool is, the questions, right? Sign up for George's newsletter. learn about that, and just take those steps, right? And maybe it's not for you. Maybe this is your new passion, but it's a part of our future. And the best way to be a part of it is just start now.
Love that. Thanks, Andrew. George, final words?
Yeah, thanks, and thanks for everyone for hosting, and Andrew. Yeah, it was great to learn more about like what eToro is doing, especially some of the reach out stuff. Found that really cool. He actually stole my answer, but I'll say it a little differently. I'll say that I used to tell people that they shouldn't learn to code, and they should actually learn to maybe be engineers that leverage these no code tools. And now I'm like, I'm not even sure about that. Like 25% of Google's code is now written by AI. So that answer is like changing so fast. So yeah, I would say try things, but I would also just be like, if you found something that works, don't necessarily assume that continues to be the best thing. The best thing I think you can do is, read about new technologies, as well as, diving in like Andrew suggested, but make sure you're willing to keep trying things, because things are going to change very rapidly in this world. And like, that's why I told that story about the advice. Like, my advice doesn't even last for a year anymore.
Thanks, George. And always use common sense. That would be my last final word. Okay, thank you so much to our fantastic guests for sharing those brilliant insights, and all of you for tuning in. I hope you've enjoyed this session and you for sure have taken something away from it. Now, don't go anywhere, as coming up next is our final session of the day, Beyond the Santa Claus Rally, How to Navigate High-Risk Trading in 2025. And it starts in 15 minutes. So have a great night, everyone. Thanks again, boss.